If I could sit down with every freelancer and give them one video, one complete picture of how to build real financial security as a self-employed professional, this is that video. Everything I have covered on this channel, every system, every account, every strategy, in the right order, in one place. Welcome to Freelancer Retirement Lab. With years of personal finance experience and the parent of a freelance creator, this channel allows me to translate what I know about personal finance into the language of the freelance economy. Subscribe now. New videos every Tuesday, Thursday, and Saturday. The complete wealth architecture. The freelancer wealth system has 4 layers. Each one builds on the one before it. Skip a layer and the system is unstable. Layer 1. The income floor. A stable monthly salary paid to yourself regardless of when clients pay. This is the foundation. Without it, every financial decision is made from a position of variable anxiety rather than structured security. Layer 2. The foundation accounts. The tax reserve, business reserve, and emergency fund. These 3 accounts protect the wealth building layer from being raided in every financial crisis freelancers face. Layer 3. The wealth building engine. The solo 401k, your primary tax-advantaged retirement vehicle. The Roth IRA, your tax-free growth layer. The HSA, the triple tax-advantaged account almost no freelancer uses correctly. Layer 4. The income ladder. The mechanism that automatically converts every business success into accelerated retirement wealth. Build all 4 layers and the system compounds permanently. Build only 1 or 2 and the system breaks every time a crisis arrives. Layer 1. The income floor. Your income floor is the reliable monthly amount you pay yourself as a fixed salary, calculated as your average monthly gross income multiplied by 70%, multiplied by 80%. Income floor equals AVG monthly gross times 70% times 80% on $6,000 average monthly gross. Income floor is $3,360 per month. Every client payment that arrives goes into the business operating account first. From there, 20% to tax reserve immediately. 5% stays as business reserve. The remainder funds your fixed monthly salary transfer to personal checking. Same amount, same date, every month, regardless of what clients paid. This eliminates the feast or famine cycle entirely. It makes financial planning possible. And it is the foundation every other layer rests on. Layer 2. The foundation accounts. 3 accounts, each one preventing a specific category of financial crisis. Tax reserve, 20% of every payment. High yield savings account, covers quarterly tax obligations, the most common cause of retirement account withdrawals among freelancers. Business reserve, 5% of every payment stays in operating account. Covers slow months without touching personal finances. Emergency fund, 6 to 12 months of essential expenses. High yield savings account, covers medical bills, equipment failure, lost clients, everything unexpected. Layer 3 to 3 accounts. 3 crises permanently prevented. Build these 3 and your retirement account is protected. Without them, the first crisis liquidates the investment. Layer 3. The wealth engine. 3 accounts in the correct order. First, the solo 401k. Open at Fidelity. $72,000 combined contribution limit in 2026. Every dollar contributed is tax deductible. Invest in FSKAX or the Fidelity Freedom Index Fund matching your retirement year. Set automatic monthly contribution at 15 to 20% of gross income. Solo 401k, $72,000 limit 2026. Open at Fidelity, free. Second, the Roth IRA, $7,500 limit in 2026. Same platform, contributions made with after-tax dollars. Every dollar of growth and withdrawal in retirement is completely tax-free. Third, the HSA, Health Savings Account. Available if you are on a high deductible health plan. $4,400 individual limit in 2026. Triple tax advantage. Contributions deductible, growth tax-free, qualified medical withdrawals tax-free. Invest it in an index fund and never touch it except for receipted medical expenses in retirement. HSA equals only triple tax account in the U.S. tax code. Combined annual tax advantaged capacity, $83,900. 3 times what a corporate employee has access to. Layer 4. The income ladder. Every income increase, 50% to wealth building before lifestyle adjusts. Rate increase, new client, retainer conversion, 50% redirected automatically to the solo 401k first, then Roth IRA, then HSA, then taxable brokerage. 50% of every income increase right pointing arrow retirement first, permanently. The income ladder converts every business success into compounding retirement wealth. It does not require more income. It requires a decision made once and operationalized automatically. A freelancer who applies the income ladder through 3 income doublings over a 20-year career builds approximately $1.1 million to $1.6 million in retirement wealth from the same income they would otherwise have earned and spent. The complete system in 60 seconds. Here is the complete freelancer wealth system stated as simply as possible. 1. Calculate your income floor. Pay yourself that fixed monthly salary. 2. Build the 3 foundation accounts. Tax reserve, business reserve, emergency fund. 3. Open a solo 401k at Fidelity. Set automatic monthly contribution. Invest in FSKAX. Enable dividend reinvestment. 4. Open a Roth IRA alongside the solo 401k. Same platform, $625 per month automatic purchase. 5. Open an HSA if eligible. Invest 100% in index fund. Pay medical expenses out of pocket and save every receipt. 6. Apply the income ladder to every income increase. 50% to wealth building automatically. That is the system. 6 components. Built once. Runs permanently. Requires approximately 20 minutes of review per year. The retirement destination. Here is what this system builds. A freelancer who implements all 6 components at age 30, earns an average of $80,000 per year, and applies the income ladder through modest income growth, solo 401k at 65, approximately $1.4 million. Roth IRA at 65, approximately $1.1 million. HSA at 65, approximately $295,000. Total at 65, approximately $2.8 million. At a 4% withdrawal rate, approximately $112,000 per year in retirement income. Complete system right pointing arrow tilde $2.8 million right pointing arrow $112,000 per year retirement income. From $80,000 income freelancer, with a system that runs for 35 years. Here is your action step. Pick the layer you are missing. Start there. No income floor. Build it this week using the formula. Take average monthly income x 70% x 80%. Missing a foundation account. Open the one that is absent today. No solo 401k. Open one at Fidelity before December 31st Street. No income ladder. Apply it to the next income increase you have. One layer at a time. In order. The system builds itself. The freelancer who builds this system will retire. The one who does not will be in the 67% statistic. The system is not complicated. It is not expensive to set up. It does not require financial expertise. It requires the decision to build it today. Drop a comment. Which of the 6 components are you going to start with this week? Subscribe to Freelancer Retirement Lab. See you on Thursday.